Okay, let's get into it. Today we're doing a deep dive on something really critical for Kenya's smallholder farmers.
Absolutely. We're talking about the warehouse receipt system, the WRS, and its financing side, WRF.
Right. And basically, it's a system allowing farmers to use their stored harvest, like, as collateral for loans.
Exactly. The big goals here are boosting food security and, importantly, financial inclusion for these farmers.
So our mission today is to unpack a recent analysis, look at the challenges, sure, but really focus on the solutions that could unlock this thing's potential.
Let's start with the basics. What is this WRS, fundamentally?
Okay, so a farmer harvests their crop,
Right.
right? Instead of selling immediately, maybe when prices are low,
They deposit it in a certified warehouse.
and in return, they get this thing called a warehouse receipt, a WR.
And that WR isn't just a piece of paper. It's actually a document of title. It proves ownership.
Proof of ownership, got it. And that receipt is what they can use as collateral.
Precisely. That's the warehouse receipt financing, or WRF part. They take the WR to a lender, get a loan against the value of their stored crop.
You can see how that helps, right? It tackles those awful post-harvest losses.
Definitely. And it helps farmers manage price swings. They don't have to sell into a flooded market.
And crucially, it opens doors to formal credit for smallholders who, often lack land titles or other typical collateral.
Yeah, that access to credit is huge.
But I also saw something about a double warehouse certificate. What's that add?
Ah, yes, that's a key security feature. It's basically two parts. The standard receipt plus a pledge certificate.
A pledge certificate. Okay.
It makes the whole thing more secure for the lender. It shifts the risk.
How so?
Well, instead of lending against crops in the ground, which are risky, hard to track.
Yeah, weather, pests.
Exactly. Now they're lending against a known quantity of produce stored securely in a certified warehouse. It's a tangible asset.
That makes sense. De-risks it for the banks.
And gives farmers flexibility on when to sell. They can wait for better market conditions, maximize their income.
Sounds great on paper. But this isn't the first time Kenya's tried something like this, is it?
No, it isn't. There was a pilot project, EAGC, from about 2014 to 2017.
And it didn't really take off from what I gather. Why not?
Well, there were some serious issues. A lack of strong oversight was a big one. Meaning there were cases of fraud, even theft from warehouses. Plus, the regulatory side was shaky, making it costly and risky for banks.
Okay, so trust was a major casualty.
A huge one.
Right.
And that trust deficit, it lingers. Both farmers and financial institutions are still wary.
So how do you fix that? What's different now?
The Warehouse Receipt System Council, the WRSC, is key. They have to step up their supervisory role, actively inspect warehouses.
Inspect them, okay. But is that enough?
Not just inspect. They need to publish the results, put it on a web page, inspection dates, insurance status. Is the IT system working properly?
Transparency.
Total transparency. And a clear, effective system for handling complaints. That's how you start rebuilding confidence. Show, don't just tell.
Okay, so trust is one piece. What about the legal side? You mentioned regulatory issues before.
Yeah, that's another hurdle. The current system is based on a 2019 act, regulations from 2021, but there's this overlap.
An overlap.
Between the WRS Act and another law, the Movable Property Security Rights Act. It governs, well, collateral registration generally.
And that creates confusion.
It does. Lenders aren't entirely sure where or how to properly register their security interest when it's a warehouse receipt. It slows things down.
What's the impact of that confusion?
Well, one big one. No private warehouses have actually been licensed yet under the new WRS Act.
Really? Why not?
Inconsistent licensing requirements at the county level are a big part of it, tied into this legal ambiguity.
So, solutions.
Long-term.
Yeah.
Amend the Movable Property Security Rights Act to clarify things. Short-term. They need to link the two registries, the WRSCs and the movable property one, so searches are seamless.
And standardize those county licensing rules.
Absolutely. Needs to be consistent across the board.
Let's talk about the Agricultural Finance Corporation, AFC.
Yeah.
It seemed like a crucial player.
Definitely. They have the mandate and access to cheaper wholesale funding.
But there's a mismatch, right? They usually do bigger loans.
Historically, yes. Minimums around, say, 200,000 Kenya shillings.
Yeah.
Smallholders often need much less, maybe under 100,000.
And AFC maybe doesn't have much experience with those smaller loan sizes or
Right.
reaching individual small farmers directly.
That's the challenge. So the plan for the pilot phase is smart. AFC will focus first on farmer cooperatives and medium to large farmers.
Okay, where the loan sizes fit better initially.
Right. They're looking at terms up to 9 months and a loan-to-value LTV of maybe up to 50%.
Lower LTV to manage risk.
Exactly. But the longer-term vision, that's where it gets interesting for smallholders.
How so?
Using digital channels. Think mobile apps or even USSD, those simple codes you dial on any phone.
Ah, so they can reach farmers directly, even in remote areas without smartphones.
That's the goal. Bridge that last mile gap.
Okay, we've talked trust, legal stuff, AFC's role. What about the government itself? Lenders still see risk here.
Yeah, they do. It's new, relies on warehouse integrity. And there's another worry. Unclear rules about agricultural imports.
How does that affect things?
If large, unplanned imports suddenly flood the market, domestic prices can crash. And if prices crash,
The value of the collateral, stored grain plummets.
exactly, devaluing the very thing backing the loan.
So what should the government do?
2 key things. First, implement a credit guarantee fund. This would partially cover potential losses for lenders, making them much more willing to participate. It de-risks WRF.
Okay, a safety net for lenders.
And second, develop clear, consistent guidelines on agricultural imports. Predictability is vital for price stability and collateral value.
It feels like all these different parts need to work together perfectly. It's not just one fix.
You've nailed it. WRS and WRF aren't standalone things. It's about building an entire ecosystem.
An ecosystem. How? What does that look like?
It means partnerships, broad collaborations. AFC, for instance, could be a market maker.
Meaning?
They could buy WR-backed loans from commercial banks, providing liquidity, or lend wholesale to cooperatives who then lend to their members.
Okay, keeping the money flowing. Who else needs to be involved?
Off-takers are critical. Think big buyers like the World Food Program or large processors. They can guarantee a market, stabilize prices.
Makes sense. Market access is key.
And input providers, companies selling seeds, fertilizer. Maybe farmers could use their WRs directly to get inputs for the next season.
Oh, interesting. Like a direct swap.
Could be. And don't forget independent collateral managers. They can provide neutral oversight, especially for warehouses owned by cooperatives, adding another layer of trust.
So pulling it all together, what's the big picture here for you, the listener?
Well, the success of Kenya's WRS really hangs on this integrated approach. You need the WRC doing its job, AFC adapting, and crucially strong, clear government policy.
Right. It's about building trust, sorting out the legal kinks, tailoring the financial products.
And weaving together this whole network of partners across the value chain.
And if they get this right, the ripple effect could be huge. It's not just about better incomes for Kenyan farmers or less wasted food.
No, it's potentially a blueprint, a model for how you empower agricultural communities, maybe worldwide. It could reshape how we think about farming, finance, and food security on a much bigger scale.